Hi ladies and gentlemen, my name is Arsalan. I am the founder of Aventine Lab. Today we have Richard West from Red Flag Alert. Richard, I'm really excited to talk to you. I've been wanting to discuss kind of your company, your origins, your product. I think it's really impressive. Would you mind telling our audience who you are and a little brief about Red Flag Alert?
Yep. So I'm Richard West, the Chief Executive of Red Flag Alert. I've been at Red Flag Alert now for 15 years, from startup to scale up. And on a personal note, I'm a dad to a 2-year-old Oscar. Play some rugby in my spare time as well. And I'm really passionate about data in general. My whole career has spanned around how companies use data, whether that's for acquiring customers or now, it's about customer onboarding, looking after your customers, looking after the risk. So that's a little bit about myself. And
Thank you. Thank you. And in terms of Red Flag Alert, when did you guys get started? Who did you build this product for initially when you created it?
So Red Flag Alert's sort of origin started with a challenge. And the challenge was our founding partner was an organization called Begbies Traynor Group, who are Europe's largest insolvency firm. And ultimately, they had a challenge, which was they knew there was lots of corporate distress out there in the market, but no single data point would help them identify it. So there was a challenge traditionally in the credit risk market, which was dominated by sort of 3 or 4 major players, Experian, Dun & Bradstreet, CreditSafe, Equifax. But all of these data sets that Begbies Traynor acquired really didn't give them any view of the forecasted distress that they were predicting. So that was where Red Flag was sort of born. There was a challenge, which was how can we use big data to create an insolvency predictive data point that could look at an organization with a degree of certainty and go, that business won't be here in the next 30 days, it won't be here in the next 6 months, it won't be here in the next 12 months. And that was basically the foundations to Red Flag Alert. So that was the initial challenge. When the company designed this data point, which is now our own credit score and our own credit limits, the business evolved. So we started our journey offering businesses in financial services and professional services an assurance around, if you use this data, it can help you understand the businesses that you're working with and let you know where that risk is. How that's evolved over time is, when understanding where our data was being used, it was tending to be used at the end of the process. So a client had found a company, they've onboarded them, they've offered them credit, they're trading with them happily, and we looked after this sort of portfolio side, which is almost like an insurance policy that would sit over your book and go, right, we can tell you everything about this customer and where it's going post working with it. So how our product evolved was then, where can we get involved in this whole customer life cycle? So rather than just dealing with the tail end of the relationship, looking at it from a risk management perspective, how do we enable, through big data analytics, our customers to acquire more good customers? And then we obviously moved into the world of client onboarding and KYC and KYB. So evolving out the data sets, partnering with other partners who could enrich our world, so that today we are a full service offering around that customer lifecycle management. So how do you acquire customers, make sure they're a good fit, make sure there's no compliance risk in there, make sure there's no financial risk in there? How do we onboard those rapidly through KYB, KYC, through our orchestration layer? And how do we then manage that risk moving forward? So that's our organization today. And we predominantly now work in regulated industries, so financial services, insurance, accountancy and legal, but we're also doing a lot of work within the construction and manufacturing sectors where, again, like law, there's a lot of people cost in operating. In manufacturing and in construction, there's a lot of cost in doing the job, so not getting paid and starting a job knowing that customer might not be there at the end can ruin companies. So they're sort of the key markets for us at the moment as an organization.
Got you. Thank you for that. And I love this conversation because I always talk about due diligence, not from an angle of financial crime and kind of pure risk, but it's a fundamental of business, knowing who you're working with, what risks they pose. I remember a decade ago in recruitment, we used to do immediate kind of credit checks on companies. Like, we were not allowed to even send a spec like to the market without having made sure they actually have the credit to pay us once we do recruit for them. And I do remember working with a law firm who we knew they had bad credit, and my manager advised me, don't work with them, you'll waste your time, they won't pay. And they didn't pay, and the law firm still owes me 10 grand. M.W. Williams. Now Taylor Rose will get on that one day. But I love that you kind of looked at risk kind of from a business point of view, and then kind of looked at intake and AML and kind of invested there as well. When you're looking at the data points you provide, what kind of data points are providing the most use to your customers? Is it the AML screening? Is it the UBO? Is it the insolvency? Which are your favorite and your customers' favorite?
So I think for me, my personal favorite singular data point, if we were just going to look at one, because there's 20 billion rows of data in our universe, so there's a lot of data. But if I was to drill it down to one or two favorite attributes, one is our growth score. So we designed a growth score 2023. Reason being, our business was scaling, but to the outside world, we were invisible. We didn't file turnover, so no one could see where we were or plot our journey from a turnover perspective. We hadn't had any investment, so we weren't on any growth databases like Bowhurst or Deal Rooms, any of these deal databases that go, this company's growing because it's taken an investment. And I asked myself the question, why? Why is no one able to engage with my business saying, you're growing, how can we help you grow quicker? And the point was data was letting us down. Bad data and just information that just wasn't there. So I tasked my team with, how do we create a propensity model? So how can we look at an organization through one lens and go, in 12 months' time, this business will grow? Not looking at what it's achieved, but actually, where's it going to be tomorrow? So we created a data point called the growth score. It's got 92% accuracy. So when we look at an organization, so there's currently 325,000 businesses in the UK today that have a high growth score. The problem is no one knows where they are, what sectors they're in, what size organizations they are, and even where they are spatially around the UK. Our growth score allows you to segment by that. So you can sit there and go, show me all businesses in London that have a high growth score. And then you can apply
by industry as well.
So you could do that. But I think the interesting part, just from an analytics perspective, if you just do that one search, it shows you growth. It shows you what industries, it shows you what size of organizations, it shows you spatially where it is. But again, that point of adding further segmentation to it. So if you're in that recruitment example and you're doing construction, well, how do you go, where are the fast growing construction companies? Not just based on their legacy financials, but what ones are going to grow tomorrow? And I think that data point, one, helps identify these organizations. Two, when you use that data point within your organization, you can change everything. Your go-to-market strategy. You can talk with confidence to someone saying, I know your business is going to grow by more than 20% in the next 12 months. With that's going to come people. So again, from a recruiter, how do you actually trust data in a way that you're not just targeting people, you're able to tell a story to that organization, and that organization goes, yeah, we are going to grow, and actually I am going to have people that I'm going to have to recruit whilst I go through that growth journey. So that's my favorite data point. And we've the work that went into that, we created a score that we looked at businesses 7 years ago, 6 years ago, 5, all the way up to present day. And when we applied that attribute and then looked at their following financials, it gave us that ability that we've actually been able to forecast that these businesses were going to grow. So for me, that's a game changer, because it's the first data point of its type that looks at forward growth, not legacy growth. And I think that's massively important.
I agree, it's massively important. And typically compliance, that the entire intake process, monitoring of your customers, is seen as a burden rather than as a research point to become either a better lawyer, a better recruiter, better salesperson. As salespeople, we do 20 to 30 minutes of research on a company before we even talk to them, right? Yeah. We spend an hour just looking at them, their employee counts. And in today's world, it's so important to have kind of databases you can rely for factual information. Because if you're an investor doing due diligence, you're kind of relying on the company providing you marketing jargons, stats that are kind of manipulated in their favor. But then if you have something like Red Flag Alert, I think you can do your AML due diligence, you can do your source of funds, but you can also get stats that are good. Good media, not all media are adverse. So I really like that. And was that your go-to-market strategy at the initial kind of outlet, which was not to kind of be another vendor that just gives AML screening data, but to be something more strategically where you're helping your clients more as partner, helping them grow rather than just selling a solution to them.
So we fell into AML, and the reason we fell into it is because I believed that when you actually look at the information that businesses use, there was this intelligence gap between different departments using different data sets at different parts of the journey. Sales and marketing using sales and marketing data, then your onboarding team using onboarding tools, and then your fraud and your finance teams using risk tools. All of those systems, all those data sets do the great job, but they don't talk to one another in an organization. That creates this intelligence gap within an organization. So what I wanted to do with our service was whatever we do, how do we do something that's unique and critical? More importantly, if it's not unique or it's not critical to our customers, then we don't do it. And for me, the ability to work with an organization in a market where there are vendors popping up all the time with one particular facet or one piece of uniqueness, I wanted to be able to go in and go, right, actually, how do we help customers with the full customer lifecycle? How can they have one single source of truth, one throat to choke when it comes to onboarding our customers, meeting our regulational and our risk parameters, and more importantly, having that same data asset being monitored long term so that we know where our future growth opportunity is and also where our future risk is. And I just feel the ability to be able to sit down with any business and say, you can have one data partner that can execute on all of this. You don't have to have a database for sales and marketing, a database for IDV and AML, a database for credit risk. You can have it all in one place, but you've got to make sure it's industry leading in every area. So there might be individual companies out there that excel in one particular facet, but when looking at the entire journey, that's where I think where we're really unique is that ability to go, we've got the mass data side, we've got this compliance and onboarding tool, which for now, I believe, we're just about to launch our new global IDV AML solution. So we've always had a global IDV solution, but we're now going global with our AML. But again, even how that technology looks, how it feels for our users and their customers, that's at the forefront of everything that we're doing, but also making sure that we're leveraging the best sort of technology. And again, as a technology company ourselves, all of our infrastructure and architecture is around modern tech. And what that's enabling us to do is build better technology on top of that. And I think most of our competitors, they're using a lot of legacy infrastructure, and there's only so many times you can build upon that before there needs to be a big, deep innovation. And I think that's where we're winning. We're deep in that innovation world currently, and off the back of that, the technology that we'll be able to deliver will be game changing, not just today, but tomorrow, going into 2030. And that's really what we want to do, is make sure we're at the forefront to be able to adapt new technology, work with additional partners, seamlessly integrate it, but then get that out to our customers ASAP.
I like that. I think one thing when I talk to founders that they struggle on is just the focus on go to market, and what you said really kind of describes focus, which is you need to make it industry leading. And if you don't make it that, and if you don't tailor your product to a particular industry, and some founders use the word hyper focus, which I love, which is really execute your workflow for one or two groups, and that will subsequently unlock sectors that you didn't know. I think Zapian's founder used that word, where they hyper focused on, I think it was charities or NGOs, and then they unlocked legal at the back end of that. Yeah. When you started, what were your focus markets, and how did you unlock legal? When did legal become a sector for you to look at?
So when we started, go back to the original pain, we had this insolvency score. It could look at a business with a level of certainty and tell you whether a business was going to be there in 30 days' time. So the initial go-to-market strategy for us was, well, who's that important for? Right? Who's that really critically important for? And we looked at it two different ways. We looked at, well, who's interested in that information from I need that to do business. So naturally, insolvency practitioners, anyone that was working in sort of restructuring and turnaround, that was a core market for us, because we had a single data point where they could go, where are those businesses in the UK that we can be working with today? And then the other side of it was, who has massive exposure in portfolios, whether they've got a high volume of customers or they've got a small client base with a lot of value in it, where having that lens from an insolvency perspective overlooked adds value. So that sort of saw us going to financial services in traditional lending, asset-based lending. The beauty of working in insolvency and in financial services is actually the ecosystem. They are very, very closely knitted, and within that is legal. So it was quite easily then to segue into insolvency departments within law firms, and then sort of going, look, this is what we do in an insolvency world, and then talking to those firms to go, how do you use data in your organization? So the way in was through the insolvency arm, but what that actually enabled us to do is then have a deeper conversation with the entire law firm to go, right, this is not just an insolvency score. You can use this for client onboarding. You can use it to find new customers. And more importantly, you can use it for managing your own portfolio. And like we discussed today, unlocking that whip, where is the risk in the whip? How do you get that in? So that's how we fell into legal. But I think, you raised a point before about being hyper-focused. I think in any industry, especially in an industry like SaaS or within that governance, compliance and risk space, there's a lot of money being thrown at it. There's businesses out there with crazy valuations that have raised lots of money. And with that comes growth. And it tends to be growth at all costs. I do, having an insolvency database, I'm able to look at every one of the businesses that we compete with and look at their financial viability and go, these guys are burning more money than they're collecting at a serious, they're going to run out of £30 million pretty soon. I don't like to mention it, but Justin, who ran Judo, great example of fantastic business, load of money thrown at it, wasn't really able to grow because they were growing at all costs. And when you grow at all costs, that comes with onboarding the wrong customers. It increases your cost of acquisition. You end up churning a load of customers, and you end up getting forced back to that point of, actually, what does a good customer look like? Yeah. How do we win more of those? So I feel like you become hyper-focused at the second stage because you grow your business, you try and improve concept, but that costs money. Yeah. When you start looking at money and you start dealing with investors, that's when you start to become hyper-focused. So for us, we now focus on 4 key sectors. Why? Because those key sectors have a requirement for our product. We've got sort of uniqueness and criticality in our product suite for them that's directly linked to their pains and their risks. Now, although we can work with every industry in the B2B world, those are the 4 sectors that we know if we win, the customer's happy, they stay around for longer, and they have full use of our entire product suite. And that's the most important thing for us. It's working with a firm not just on helping them with IDV. We want them with, how do we help you reduce your cost of acquisition risk? How do we help you speed up your onboarding? How do we help you manage your portfolio and where your future risks lie? And how do we make that sort of this perpetual loop where the more you're doing it, the smarter you get, and so on and so forth, and enabling that in technology? So, we've gone from growth at all costs, like most businesses do when they take investment, to now being hyper-focused. And when you become hyper-focused, it might feel like you're slowing down, but actually every part of your business improves because you understand sales cycles, you understand life cycles, and you're able to predict how you spend money and how much customers you now bring in. And that's the journey that we now find ourselves on as we go from being a business that was a few million on this road now to 10 million. But I'm now already thinking, how do we get this business to 25 million in the next 3 years? And to do that, it's getting hyper-focused, really understanding those markets, and staying away from any of the other distractions.
Yeah, I think that's the key, staying away from distractions. And some founders say getting from 0 to 100 is the most difficult part of the business journey. And then kind of you learn from that 0 to 100 and know what to do afterwards. Just on the element of hyper-focus, I think you got to know what product you're building, and you got to say, this is my customer, and I don't want someone who just wants the data point on insolvency and that's it and nothing more. And you got to kind of have a strategical product vision. People will compete with you on product, but not vision. Yeah. Where you want to take something, that's purely your mindset, the company's mindset and vision. And I think having a thought about that and asking yourself, well, this bank I would get a demo with if I added an EIDV solution, but my core product doesn't really cater for EIDV and KYC. So should I really bring KYC on, which is a 100K project for getting data, getting kind of an integration, or should I ignore that and continue with what works for me? Yeah. Do you have moments like that where you think, oh my God, I need to bring AI in, or I need to bring this new fad in, and then realize, actually, no, this is just a massive distraction?
I think any business that has a sales team we'll have distractions at some point where someone in the sales team goes, oh, this client would have bought if we have this feature. And I think when you're scaling, you are guilty of trying to be something for everyone. And that's attractive because with that, you increase revenue. It's not scalable, and it's not it's not efficient or effective. So for us, we've pivoted over the years, but what we stay focused on now is this customer lifecycle value part, which is if we can improve our offering at each one of these steps, whether it's acquiring, onboarding, or monitoring, we will massively invest in that. And at the moment, we're completely investing in the deep innovation at infrastructure level that's going to enable us to build better technology tomorrow. So for me, stay away from distraction. People talk about AI. AI can be an enabler. The challenge you've got with AI in our industry is data. And what I mean by that is AI can go out and trawl the web for sanctions, adverse media, write you a script. But ultimately, when it starts to look at business information, when you look at a KYB perspective, data is a string, and AI can read that string of data. What I want to be able to do is, why are we looking at strings of data? Because it's the way that we've always looked at data. It's rows, it's cells, it's an Excel. Where we're taking our business is, imagine taking an Excel spreadsheet and turning it into a Rubik's Cube. And you've got 9 different dimensions of how you can look at that data. What that actually enables is, rather than looking for linear linkage, you can actually start to unearth patterns and relationships where data doesn't make the connection. And it's not because it's not there, it's because you're not able to connect it in this row format. So what we're doing, we've become the first fully native in the cloud credit referencing agency in the UK. So that's something that we're really, really proud of. It was a 12-month project moving all the way into Microsoft Azure. We are completely underpinned then with a Databricks infrastructure. And by doing that, that's giving us this Rubik's Cube of data now when we're looking at businesses. And what that's going to enable my data science team is to do the things that AI should be doing, which is helping you build better products, not the gimmicky stuff that I see it being used for now, which is improving user interface and improving a customer interaction. If you build the right product that's sexy, easy to use, you don't need gimmicky AI. What you need is AI in the background that's helping create new scores, new algorithms, new propensity models. Again, you can only get to that when you create data and start looking at data through a different lens. And that's everything that we're now doing as an organization. And that really, really excites me, because there is going to be so many unknowns that at the moment people just aren't aware of. But for us, they start to become known knowns. And that's something that I think is really, really exciting.
And I think it's exciting for financial services. Fintechs I speak to, they all want more with the data they have. They want that Rubik's Cube, four-dimensional angle of looking at various data points they have on a customer, from their fraud team, behavioral pattern team, risk scoring team, intake. These are all different teams on a big fintech that has 1,000 employees on just AML, and making sense of that data could cut down a lot of time and stuff and all that good stuff. Just a few kind of fire questions coming at you.
You just on that point though, you make a great point, which is people want more data, right? I was dealing with a financial service company this week, and the biggest challenge that they've got is they've accumulated so much data in their CRM system that well, first of all, they now need to clean it because it's decaying. So we're working with them on getting to a single point of truth within their CRM. However, when I was talking to the organization, I was like, you've got 150,000 prospects that you're going after, which basically means your sales and marketing team's effort is being spread across all that noise. My challenge to them was, we can probably reduce your CRM data down to about 20,000 records, because once we start to add additional data points and really allow you to see what's in there, there's going to be a lot of stuff in there. And you're like, why are we even engaging with that? Why are we even... Some of these businesses don't even exist anymore. I think that the trick is with data is that people need to do more with less. Whereas at the moment, they're trying to do more with more, if that makes sense. And it just makes it more confusing. It goes back to being hyper-focused. If you're a small business or a large business, if you can put all of your revenue, all of your sales and marketing costs into something focused, you'll get much more traction than in this case of this company trying to spread their message across 140,000 customers. just focus on the 20,000. But the ones that you now know are a good fit because you've got that data, you know that they're a compliant good fit, you know that they're a good risk, and more importantly, you've got all of this data to be able to ensure that you've profiled them correctly. And then spend your money on your messaging, spend your money on your cadencing, spend your money on spending more time getting in front of 20,000 people versus being quite budget and rushed across 130 or 140,000 people in that case. So that's what my thing about data is. I don't think people need more records, more leads. I think they need more intelligence.
Yeah.
And by doing that, they can actually work with a smaller amount of data.
Yeah, I'll give you an example. Mine, for me, it's I'm just a consultant, right? But my note taker is the most important part of my tech stack because it records every conversation I have. And it's not that I need more data at this point, it's that I need access to those conversations plus analysis. So, for instance, I can hook up my note taker to Zapier, to ChatGPT, to email. So I could have one centralized source of truth, and I can ask that centralized source of truth, hey, what is this relationship I have with this X person? Give me a key summary. Yeah. And it will fetch it through my emails, fetch it through my HubSpot, Notion, and my note taker, and actually provide me a beautiful summary. So it's about what you do with what is in front of you and what you're acquiring on a daily basis. Quick fire questions for you. Sorry. Founders. So if you're a RegTech founder, what kind of advice do you have for them?
If I was a RegTech founder starting up today, I would say a few things. Nail your go-to-market strategy. You know, who are you going after? What pains and risks do they have? And how critical and rare is what your product does to that? And if you understand that, that's the first point. That's going to help you stay modest. I'd also sit there and say, don't look to raise money quickly. Get to a point where you've built a business up off your own blood and sweat and tears and investment. Why? It teaches you to be lean, and it makes you focus, hyper-focus. You can't be scattergun because you've not got the cash there. So I think, don't race to do investment. I think, again, the challenges with investment is that people think that they're raising money and that raising money is the objective, but actually they soon run out of cash. They soon have to raise again. There's down rounds, and then in some cases that I've seen, you've got people and founders being exited from businesses that they've set up because their aspirations were too big, and they thought that money was the problem, or money was the answer.
What do you think of the thought of a lot of founders are trying to create a Bugatti? You know, they're trying to create a tool that takes 10 million, 5 years, 350K a month to create. By the time they create that tool, it's buggy because we know RegTech products don't work out of the go. Yeah. So they're in millions of debt. Their company is owned by somebody else. I mean, it's you got to have an MVP ready to go within 3 to 6 months is how I see it. Yeah. Do you think some founders go out too early and then some founders take forever to actually launch something?
I think the problem is in that RegTech space is when you look at a lot of the companies out there, they don't really have a business. They're reselling someone else's service, or they are improving an element to a UI, but their actual operational cost to service it is huge. You know, you're looking at businesses that even in that IDV AML space, unless they actually own the underlying technology, which 99% of them don't, you know, they're working with partners, whether that's LexisNexis, whether that's other providers, GBG, etc. They're harnessing that technology and building on it. And that basically, the only people that win are the supply chain. Yeah. You know, that's the only people that win. You're actually the most cost-effective way for them to make money. So I think the sooner that people get their head around what does it actually cost per transaction, when people look at that, they'll sit there and go, it's not really a good business. Yeah. This is a business that's going to have to spend a load of cash to drive ARR, and the exit is someone will buy my ARR at some point. And I think we're going to go through that stage in the market now. There's going to be a lot of consolidation. You know, there was an acquisition this week with obviously Smart Search buying Credus. Crazy valuation, in my opinion. 78 million is what I read. However, that's the market. And I think, you know, the good thing about that business is that I don't think it was riddled in lots of debt. Whereas there's a lot of other organizations out there turning over 5, 6, 7, 8, 9, 10 million. And they're burning 10 million at the same time. So they're...
I think Credus can sell because he did have a strategy. He did have those.
Well, yeah. So I think the valuation's crazy. Yeah. I think the acquisition strategically is brilliant. Again, I don't know enough about their actual technologies, but when you actually look at the numbers, getting to a £78 million valuation based on purely financials, I look at that and go, it's crazy money. But for the right business that has focused in on that go-to-market strategy, that's got clients, got good retention, and clearly in this case making good margin, you can get that sort of valuation. The problem is like I said, is that there's businesses smaller and bigger than that example where they're not going to fetch that valuation because someone's going to do a lot of acquiring in the next 6 to 12 months.
Well, if you started an orchestration platform 10 years ago and focused just on property, you'd get to a point now where Credus is, So it's back to the point of hyper focus, pick an industry, master that industry, get an enough shareholding in that industry. I think 52% of the property firms use Credus for their EIDV. So that goes a long way when you're pitching to sell your company.
Absolutely.
And I think if you're starting a RegTech, just avoid orchestration at this point because you're not a genius by creating an orchestration platform. What you need to do is look at problems and solve these problems. And not all problems need more products. Some problems need depth.
Yeah.
So, for instance, risk assessment. Maybe it's a deep it's a deep kind of a system and a process. It's not a wide process where you required kind of 10 different products or modules attached to it. It just needs to be a really deep and slick system to work. So I would advise staying away from what thousands of other companies are doing today, which is starting orchestration platforms and have an innovation in mind.
I agree with you. We're heavily investing in orchestration and at the moment. However, the point you make is if you're solely offering orchestration.
Yeah, and if you're starting now.
It's a bad move. The value, I think, is that if you've got the data, so we're an independent credit referencing agency, we have a lot of data that's our own. We also buy in a lot of information. But if you can take the product stack that Red Flag Alert has and an orchestration layer, that really becomes valuable. Yeah. Whereas if you're just selling an orchestration layer and reselling other data packages into it, or even just using their incumbent providers, look, there's a million of them out there. There's always going to be someone that can build it cheaper. And I think, again, if you are going to create these orchestration tools, you've got to almost create it like a SaaS product. Customers now want something that they can go in low code or no code, drag and drop, build my own rule bases, have the data already plumbed in. If you can build that, you're onto a winner, and that's something that we're currently executing on at the moment.
Yeah, and I think again back to that, if you're building that today, you better have an industry where there's not a lot of fishermen fishing there.
Yeah, absolutely. You better get your niche right and make sure there is a serviceable market that allows you to scale. If there's only 5 or 6 customers in it, once you actually look at your market, then it's probably not a good business idea as well. And again, it goes back to that point. I think people want to create businesses, but they don't really look at the business model. What is the total addressable market? From that, who realistically is going to buy our technology? We look at that and go, we can sell to accountancy firms. There's 30,000 of them in the UK. We're not going to sell to all 30,000. Plus, what are the ones that are really going to spend good money and value with us? Probably then looking at the top 200 firms. Mm-hmm. So your market's gone from 30,000 to 200.
And out of 200, there's only 50.
And that's it. And then and of those 200, I think not only does the technology have to be relevant to them, but your brands have to be aligned. Yeah. There's going to be certain accountancy firms that I can sit here today and go, no matter how good our product is, how much commercially sensitive we try to be, we're just never going to work with that firm. Why? Because the brands aren't aligned, if that makes sense. Whereas I can name 10 or 15 accountancy firms in the top 200 that we don't work with today, but just looking at their brands, looking at what they're doing, what they're investing in, I'm like, they will be a customer of ours. Yeah. Like, it's going to happen. But again, comes back to that point, if you have a good product, do you have a good market to sell it into? Or are you having to sell it to everybody, be loose, burn loads of money, and then eventually end up on the stop pile, on the rubbish heap?
Thanks for sharing all of that, Richard. Just a question on vision. Where you've taken the company so far is really interesting. What's next for Red Flag Alert?
So there's a few different things. So we've got this broad product suite I mentioned, which is this acquire, onboard, and monitor. The first thing that we're doing and executing on at the moment is becoming the UK's first dynamic credit referencing agency. People might go, what's that actually mean? Yeah. But traditionally in the credit risk market, how information is made available to end users go back to this recruitment example that you were looking at, you'll look at a credit report, and the information that you're looking at is all historical information up until yesterday, not today. And the reason being is that data is changing so much. A lot of these big credit referencing agencies collect that data in day, they upload it to their platforms overnight, and then they push that information out the next day. Why? It's the way they've always done it, and it's their underlying architecture. They can't really modernize that process. So what we're doing at the moment at Red Flag Alert to become the first dynamic credit referencing agency is, again, being completely native in the cloud, investing in Databricks and getting all of our data estate put in that. But what that's enabling us to do is to ingest data in real time, publish it in real time. So the difference between a business finding out tomorrow that a company's just taken on CCJ, they have to wait till tomorrow to find out if that's happened today. And I'm like, that's not good enough. If it's happened today and the data is available today, why aren't we telling businesses
Like
today?
screening, right? You should
Exactly that. So what we're almost trying to do is the things that, you know, Revolut and Monzo have done in banking is that how can you take a traditional industry, banking, in ours, business information, how can you modernize it? Or you can just build a nice flashy UI, or you can do the deep innovation where you go, actually, we're going to change the way that this sector operates, and that's the big thing for us. Big thing for us as an organization now is to become the first independently owned dynamic credit referencing agency, which can offer insights in the same day versus finding out tomorrow what's happened today. So that's part one. And then part two is we're on the third iteration of our software. So in 2026, we'll be building our fourth iteration, Red Flag 4. And Red Flag 4 will be, again, built on top of this deep innovation at an architectural level. And that's going to enable us to bring in better data analytics. And so one of my big things that I want us to execute is how do you share information all the way across an organization? The biggest blind spot in an organization is board level. Yeah, the risk teams know what's happening in risk, compliance know what's happening in compliance, credit know what's happening in credit. The information that they share upstream to board is pretty much useless, or they spend all month building up a fact pack. So one of the things that I'm looking to do with the business is build a management information environment where you can take your portfolio, you can look at it from a credit risk, from a compliance, from a governance perspective, and you can visualize that to a board, and you can rewind time and go, well, what did that look like 30 days ago?
Yeah.
And more importantly, with our propensity models, what's it going to likely look like in the next 30 days? And that sort of information at a board level is going to be massively important because, again, the government are cracking down through the UK Companies Act that more businesses, especially medium and enterprise businesses, have to put more risk controls in place at a board level.
Yeah.
What's stopping them is the information, the management information, that they're not getting it, or it's a tedious task to get it to them. So again, for us, we're going to make that really, really simple process. So we're heavily investing in data visualization and business intelligence within the new platform. We're going to, because of the way that the architecture is going to be built around Databricks, people are going to be able to interrogate and segment data in ways that they've never been able to before, which I'm really looking forward to. And then we're just going to continue to make sure that the technology is as slick as possible. Because again, having a diverse product that helps acquire, onboard, and monitor, you have to be able to go through that journey in our product, not as an orchestration layer, just as an end user. How do I find a lead? How do I onboard it as a client? How do I put it into a portfolio? How do I monitor it? I don't want that to look like 4 interactions. I want it to be one journey. Yeah. And I'm building something so that you can put an apprentice in our machine and he can do the same level of work as a seasoned credit risk professional or compliance professional. The only thing they lack is the knowledge, if that makes sense, but actually doing the tasks, collating the data, doing the assessment, putting that all in one platform. And ultimately, I want to be able to then roll that out to SMEs. So how do we give small, medium-sized businesses the same tools that enterprise and corporates have? And that will be the next phase of our journey. So, you know, focusing on the industries that we're working with, you know, creating the best product if you're in legal, accountancy, financial services, you know, insurance or lending, create the best product for those. And then how do we then move into the smaller businesses in those sectors and create a version for them that's just as powerful but more affordable? Yeah. I think that's definitely something that we're going to be looking at into 2026.
And I love that you're not adding more. It's you're looking at what you have and thinking, how can I reach value through depth? And I think value always hides in depth, not in the surface.
Yeah.
You'll never find a good tool that's quite shallow. You'll find
Yeah.
actual amazing tools that go deep into a couple of areas. So
And we've sweated our asset to this point. So, our technology at the moment is as good as it's going to be. We can make it look better, clearly. You can spend a lot of time on that. Until we do this deep innovation layer, there's no point in building our next version. Our next version's got to come off the back of new foundations. And those new foundations will be able to, what's my vision? My vision is that the vision I have today to be completely torn apart by what's actually achievable tomorrow. So I think there's, for me, it's being able to tear up my vision in 12 months' time going, Jesus Christ, I did not realize that making this deep change at the bottom would even make this available.
Yeah.
But until then, it's it's heads down, focus on those markets, look at how we can continue to improve, whether that's speeding up information or improving the user interface. But it has to be core to those sectors and those markets. We're not going to create an AI widget that's just something else that we can sell into. If it doesn't add value in those three areas, we're not going to do it.
Got you. Awesome. Thank you so much for that. Pleasure speaking with you.
Absolutely.
We have a webinar coming up together. Red Flag Alert and Aventine Lab are collaborating on a webinar. You spoke with Andy today at
Yep.
Kennedy, so that's coming up. That's a really interesting chat.
Great guy.
Great
Great guy, Andy.
Great
Really
chat.
colourful chap.
Yep. And that's going to be on digitization for law firms and kind of costs and savings there. Pleasure speaking with you, Richard. And we look forward to speaking with you again.
Absolutely.
Thank you so much.
Appreciate it. Thank you.